on Business Incorporated today. Rwanda extends tax deadline for property owners. Egypt to build a $3 billion waste-to-hydrogen plant. Mobile money transactions outstrips checks in Ghana for the year 2021. You're welcome to the program. It's Business Incorporated on Channels Television. I'm Ini John Mekwa. Well, we'll start off the program with trading activities in major markets in Africa. Major equity markets were traded in positive at intraday. Here in Nigeria, the market's main index was up 0.30%. As some corporate earnings result trickle in, which is spurring investor sentiment, while South Africa's JSE and Egypt's EGX rose by the same margin, both climbed higher by 0.76%. Elsewhere on the continent, Nairobi Stock Exchange closed Monday's session in the positive. It was up 1.40%. We cross over to the Middle East, where major equities were also positive at intraday. The Abu Dhabi index was up 0.15%, but Dubai's index was in the negative territory. It was down more than 1%. Still within the region, Saudi Arabia's market index edged higher by a marginal 0.04%, while the Qatar index was by over 0.5%. Let's go to Europe now. German retailers have had somber months as pandemic restrictions have been diminishing the crowd of potential shoppers. Today, the country's statistics office published the latest retail sales figures. Well, we have Chris joining us from Berlin now to give us the details. Hello, Chris. So December was the last month of the holiday shopping period, which to many retailers has the most important time of the year. But figures coming out now, what does it tell us about the sales for December?
Well, expectations were low and the result was disappointing. Sales of German retailers in December dropped by 5.5% compared to the month before. Experts had only anticipated a decline of around 1.5%. Retailers say the figures are the result of the German government introducing the rule that only people who are vaccinated against or have recovered from a coronavirus infection are allowed to enter the majority of shops in Germany. This rule came into effect in December. Also, infections with the Omicron variant had already been on the rise, which may have caused people to avoid shopping areas. Looking at particular product segments, well, revenues of textiles, footwear, and leather goods, all typical Christmas presents, were down more than 17% compared to November, but around 1/3 above the figures of December 2020, when even stricter rules applied to public life. There is some positive in today's figures because looking at the year as a whole, retail revenues climbed 0.7%, meaning they did reach another record high. And there's hope spawning among German retailers because consumer sentiment has picked up in January. It is still being dampened by coronavirus restrictions. Towards the end of last year, consumer sentiment had dropped significantly 2 months in a row, but now the tide seems to have turned. However, this can hardly gloss over the fact that for German retailers, it has been a dire finish to an already somber holiday shopping season.
Well, you talked about the shopping rule that those selling essential goods are only allowed to cater to customers who are vaccinated or who have recovered. What are people saying about this rule?
Now, a recent YouGov poll showed that almost half the people asked said they felt the rules were too strict. Instead, they supported the idea to also let people into shops that have tested negative for the coronavirus. But another 38% said they would oppose softening the rules. The German government introduced the measure, which would allow only vaccinated or recovered people to enter large areas of the country's retail sector in December. Only stores selling essential items of daily use like supermarkets or pharmacies have been excluded from the rule. It has been a controversial move. Critics say it's another attempt to force people to get inoculated amidst a vaccination drive that has reached not as many people as officials had hoped. Just this week, Germany missed the target of raising its vaccination rate to 80% of the population, a goal which the new government had set. Of course, retail groups also voiced their objection as they feared for revenues, and as recent weeks have been showing, rightly so. And to turn a controversial measure into a confusing one, courts in several German states have overruled the decision, meaning the measures apply now only in some states, not all of them, causing frustration among shoppers and business owners. Germany's retail associations have therefore called for the rules to be less stringent and less strict. They claim that their members are not a driver of the pandemic. Infections would rarely happen while people are out shopping. Plus, businesses have spent ample amounts of money to put protections into place. And indeed, the persistent call seems to have an effect. A number of politicians here in Germany have been pushing for an easing of coronavirus protection measures, including in the retail sector, once the Omicron infection wave is subsiding.
Yeah, so let's look at the financial markets now. European stocks were able to rebound on the last day of what otherwise has been a pretty somber January. How are they kicking off in the new month?
Well, yesterday's upbeat sentiment carried over into today. The DAX posting gains of around 1% in the early parts of today's trading session. Yesterday, Germany's blue chips index advanced around 1%, offsetting some of the losses of the previous week. Stocks advanced despite the news that inflation in Germany remains high. The country's statistics office announced that on average, prices rose 4.9% last month, which is less than the 5.3% of December, but an inflation rate of around 5% in Europe's biggest economy is certainly something that the European Central Bank will discuss at the meeting of its governing council on Thursday.
All right, Chris, thank you so much for that update, and enjoy the rest of your day. We move to the UK now. A strong expansion recorded in the manufacturing sector at 57.3. Strong upticks in output and employment underpin growth. We have Juliana joining us now to give us the details of that PMI. Hello, Juliana. Good afternoon.
Good afternoon, Annie.
So we have 57.3 for your PMI, but it seems it's not all good. We still have sharp price pressure, persisting.
Absolutely, you're right. I think the headline is that manufacturing and factory output in the country has had a really strong start in the month of January, particularly at a time where it is very, very low. Lots of consumers have already spent in the month of December. But I think the fact that the PMI has come in at 57.3, as you said, marginally lower than the 57.9, but higher than what economists had predicted at 56.9 is pretty good. But as you said, there are still issues around supply chain disruptions, issues around staff absenteeism. They do remain at the top of manufacturers' minds when it comes to ongoing orders for the rest of the year. But I think anything above 50 really does show expansion. So I believe the Chancellor and the sector are pretty happy with that data released earlier today.
Yeah, well, economists say anything above 50 is good news. And once again, we are talking about house prices. I mean, we've talked about this like how many times on this show, and they're up now 0.8%. Why are we talking about this again?
Well, we are, because the nationwide house price index have released more data that shows that the property boom in the UK is not bursting anytime soon. The sector has had its strongest start to the year since 2005. So for over 15 years, they haven't seen data as strong as this, showing a surge, as you said, of 0.8% year-on-year prices. The average cost of a home in the UK is about £256,000. Now, that's a lot of money. And there are concerns going forward, because we know that this year in the UK has been dubbed the year of the squeeze. We do have high interest rates. We do have very, very high inflation. And we know that energy bills are going to be rising. Yes, Prime Minister Boris Johnson's government has put in steps to get generation rent to generation buy, but are young people going to be able to buy when the cost of living is so high? The cost to buy a home is very, very high. And even with a 5% deposit, you would have to put over 60% of your annual salary on a deposit on a home if you are fortunate to buy one. So a win-win perhaps for the landlords, not so good for first-time buyers.
Two different sides of a coin. Well, this morning, FTSE 100 jumped. How's it trading at this time?
Pretty good. Triple-digit figures on the FTSE 250, which is up 1.25%. The FTSE All-Share is up by 0.91%, and the FTSE 100 is up by 0.81%. The British pound is currently trading up as well, INI against the US dollar by 0.45%. It's also trading up against the euro by 0.13%, and also trading up against the Japanese yen at intraday by 0.06%.
Thank you so much, Juliana, as usual. Thank you. Enjoy the rest of your day.
Thanks, Innie.
So let's move on now, and we go to stock futures, which declined in early morning trade after Wall Street wrapped up a tumultuous month with steep losses as investors grapple with the Federal Reserve's policy shift. Futures on the Dow Jones Industrial Average fell 71 points. S&P 500 futures traded 0.3% lower, and Nasdaq 100 futures was down. While stocks pulled off a tech-driven rally yesterday, major averages still suffered a brutal month marked by wild price swings. January sell-off came as the central bank signaled its readiness to tighten monetary policy, including raising interest rates multiple times this year to tame inflation that has shot up to the highest level in nearly 4 decades. Investors flocked out of growth-oriented technology shares, which are particularly sensitive to rising rates. This week, a flurry of key companies are expected to report earnings, which could set the tone for the month of February. In Asia now, markets rose today, tracking stocks on Wall Street as they surge for a second session. Japan Nikkei 225 rose 0.28% to close at 27,078.48, while the topics closed flat at almost 2,000. Some tech stocks rose, with SoftBank rising more than 1% and Sony pairing earlier gains to inch up 0.39%. Meanwhile, Japan's manufacturing activity grew at the fastest pace in nearly 8 years. In Australia, the AX 200 rose 0.49% to close at over 7,000 after declining earlier. The Reserve Bank of Australia maintained its cash rate at 0.1%, going against market expectations for a rate hike, although it ended its bond buying program as predicted. Following the monetary market decision, the Australian dollar was at 0.70, down from levels around 0.706 earlier. Elsewhere, India has announced its budget for fiscal year 2023. Among other details, its finance minister announced spending of 200 billion rupees, which is $2.68 billion, for a highway expansion program. And we'll touch on other spending, tax collections, and the fiscal deficits. Let's go to the oil market now. Prices edge higher today, trading near 7-year highs hit last week as investors bet supplies will stay tight with a limited production hike by major oil producers and a strong post-pandemic recovery in field demand. Brent crude for April delivery was up 14 cents at $89.40 a barrel. Meanwhile, the front month contract for March delivery expired yesterday at $91.21 a barrel. That was up 1.3%. U.S. West Texas Intermediate crude rose 13 cents to $88.28 a barrel, having gained 1.5% in the previous day. The market is maintaining a bullish tone on expectations that supply tightness will continue as demand is picking up, with receding fears over spreading of Omicron coronavirus. Also, market analysts say that a widely expected OPEC Plus meeting, which is holding tomorrow, to keep its policy of gradual production increases on. And close to that, the United States Energy Information Administration January short-term energy outlook has forecast that OPEC petroleum production will increase by nearly 2.7 million barrels per day this year. That's the largest year-over-year increase in OPEC production since 2004. This increase in the EIA's forecast of crude oil production is largely based on their interpretation of the January 2022 OPEC Plus meeting, when the participants reaffirmed their decision to continue to increase output by 0.4 million barrels per day each month until all of the production cuts are reversed. We'll take a break now. When we come back, we'll head straight to the African continent, beginning with the commodity space. To stay with us, it's Business Incorporated on Channels Television. Welcome back. You're still watching Business Incorporated on Channels Television. Now, the price of aluminium, which is a metal used in manufacturing of cans, roofing sheets, and airplane parts, has spiked over 24% in the last 6 months and is currently trading at $3,021 a metric ton, gradually closing in on a decade high. Factors driving this include the ongoing tensions between Russia and Ukraine. Given that Russia is one of the largest exporters of aluminium in the world, concerns are mounting that prices are set to rise even further. Are these fears unwarranted? We have Longi Dafour, financial derivative analyst, joining us now to share his thoughts with us. Hello, Longi. Good afternoon.
Good afternoon. Thank you.
So higher than normal energy costs have made smelting of aluminium costs inefficient and are leading to plant closures in China, Europe, and some other parts of the world. How do we see this supply and the price of aluminium in the nearest future? Where do we see it heading to?
Right. So like you rightfully said, aluminium is an incredibly energy-intensive metal to produce, so much so that it's in fact referred to as congealed electricity, because of how much electricity or energy it takes to produce it. Now, regards to where aluminium prices are likely to go in the near term, the big defining factor, like you've already said, is what's happening in Russia, Ukraine. Now, Russia accounts for about 1/10 of global aluminium exports. That's in the direct sense. So possible sanctions on Russian exports, an embargo placed on their exports, or if Russia themselves decided to cut exports, that would greatly affect global aluminium prices and push prices upwards. Now, in the indirect sense, as we know, Russia is also one of the largest exporters of crude oil and gas in the world. Now, like we've rightfully already said, aluminium takes a lot of energy, and global energy prices currently trading at close to $90 per barrel. So the higher energy prices go, we're more than likely going to see this translate into cost in aluminium production, which is what is affecting current aluminium smelters around the world. China, Europe, and so on, we've been seeing a lot of plants getting closed down because of high energy costs. Now, it remains to see exactly what might play out in Russia. So, but yeah, that's poised to be the main defining factor in where energy prices go in the near term, and of course, aluminium prices.
And aluminium currently accounts for about 1.1 billion tons of carbon emissions, making it a very large source of environmental pollution. Is there a way to balance the usefulness of aluminium and these pollution factors that comes with it?
Yeah, so presently what we are currently seeing is China, for instance, which is one of the largest producers of aluminium in the world, is actively trying to cut down on their carbon emissions. Now, to give some context, that 1.1 billion tons, which aluminium accounts for, is equivalent to the total carbon emissions of France and Germany combined. It's quite huge. So given the fact that aluminium is such an in-demand commodity or metal, the second highest metal in demand after iron globally, it wouldn't be, it's not really possible to say that we might see a decline in aluminium production in order to meet carbon emissions. What we are more than likely going to see is global powerhouses and global aluminium producers and so on, more so regulating the aluminium production in order to meet set guidelines for aluminium production and so going on.
So when we look at this environmental challenge and the other factors with Russia and all that, where do we see, what's the outlook for the prices in the nearest future?
Yeah, so outlook for prices in the near term, like we said, it's going to come down more than likely to how it plays out in Russia and, of course, supply chain issues. So presently, there's congestion at Chinese ports, and like we've already said, China is one of the major, it's in fact the largest exporter of aluminium globally. So the airport congestions that we are currently seeing are feeding into supply chain issues, which are, of course, weighing on global aluminium prices. So the sooner these supply chain issues get worked out and the sooner tensions between Russia and Ukraine dim, we are more than likely going to see aluminium prices follow the same trend, either dim or rise with these issues.
All right, Sir Longi, thank you so much for sharing your thoughts with us. We'll certainly follow what's happening in Russia, Ukraine, and see how it affects the price of aluminium. Enjoy the rest of your day.
Thank you.
Let's move on now. Our Rwanda Revenue Authority has extended the deadline for filing and payment of property tax and rental income tax for the year 2021 and the trading license for the year 2022. The deadline that has been set for January 31st, that was yesterday, has been extended to February 15th. And this is because of the late turn-up of taxpayers, which led to the payment system slowness, making it difficult for filing and payment on time. The tax administration body urged all concerned taxpayers to file and make payment before the new deadline, so as to avoid applicable penalties. The deadline for property tax payment has been extended for the second time, where the deadline was for yesterday from December. And Egypt's Suez Canal Economic Zone has given H2 Industries preliminary approval for $3 billion waste-to-hydrogen plant. The 1 gigawatts hydrogen center will be fed with 4 million tons of organic waste and non-recyclable plastic a year, secured at the northern Mediterranean entrance to the Suez Canal. It will produce 300,000 tons of green hydrogen annually. Egypt has been ramping up its green hydrogen ambitions in recent months, especially as it's set to host the COP27 Climate Summit in November. Hydrogen is projected to account for 12% of global energy use and 10% of carbon dioxide emission reductions by 2050, driven by climate change urgency and countries' commitments to net zero. Current annual hydrogen sales represent a market value of about $174 billion, which already exceeds the value of annual trade in liquefied natural gas and could grow to $600 billion by 2050. In West Africa, Ghana's summary of economic and financial data shows that mobile money transactions for 2021 significantly outstripped check transactions by 770.4 billion cedis. This is compared to 522.9 billion cedis recorded in the 8 months of 2021. Mobile money continued to remain the biggest payment solution in the country, with an estimated 905.1 billion cedis transactions recorded last year. Total check transactions, however, stood at 134.7 billion cedis during the same period. This indicates that many customers, particularly retail consumers, now prefer mobile money as the easiest form of banking transactions because it is accessible and reliable. And in Uganda, the shilling is expected to keep strengthening against the dollar in the short term, adding to gains of 1.4% in January and 0.3% in December as the flow of foreign funds increase. Last week, the executive director of Finance Intelligence Authority revealed that Uganda risks being blacklisted by the Financial Action Task Force if the government does not tackle money laundering by May this year. Uganda was placed in the grey list in 2020, which means that the country had been identified, but it made commitment with the FATF to address the specific issues within a given time frame. And that's where we leave it for today on Business Incorporated. Thank you so much for being a part of it. Let's do it again tomorrow. I'm Ini John Mekwa.